Good morning and welcome this morning to Trader Talks in today's market. There is the opening bell. My name is Ben Watson and I'm joined by my good friend Brent Moores. We're going to talk about what's going on in the market today. We're going to talk about all of the data that's out there, Brent, this morning, as well as what that means for this market and some individual names that might be moving today as well. But first of all, welcome to you, Brent. Thanks for being here.
Hey, thanks, Ben. Good to be on with you. I always love being on with you. And if I'm not mistaken, you're off to a workshop later this week here.
I am. Yep. As a matter of fact, tomorrow morning we're headed over to Chicago. We're going to be doing the advanced options workshop on Friday and Saturday, actually in Schaumburg, which is a minor difference, except if you're from Chicago. And then you point out the fact that Schaumburg is not Chicago, and there's that differentiation there for sure. But thanks for pointing that out. And oh, by the way, Brent, we've got our good friend Cameron May out there in the chat. Cameron is helping to answer all of those questions. Cameron is a 20-plus year veteran in the financial market, as are you, Brent.
Yeah,
but Cameron's there specifically. Yeah, I know.
Yeah, it's always good to have Cam. He's very knowledgeable in the markets, and he's great in the chat. So as you have questions, he's there to help you, and Ben and I will try and keep our eye on the chat too and help you out as well.
Yeah, for sure. And I'll tell you what, it seems like that 20 years has gone by in just a flash, but every day seems interminably long, right? But let's get to some quick housekeeping items here really quickly, Brent, as we get started this morning. And I first of all want to recognize our great production staff for helping us to bring all of this content to all of you. And welcome to all of you, whether you are here in the live version or in the recorded version. If it's your first time, welcome. If it is your 100th time in this webcast, welcome to you as well. If it's your 101st time, not so much. No, I'm just kidding. But let's jump in here really quickly. A couple of things. Everything we talk about simply for illustrative and educational purposes only and should not be considered to be an individualized recommendation. Remember that any specific symbols that we use are for, again, illustrative and educational purposes only. We may talk about options here. If we do, remember that options carry a high level of risk and are not suitable for all investors. Make sure that you're aware of the characteristics and risks. Standardize options before considering any option transaction. Now, we're going to be using the Thinkorswim desktop software platform. It is specifically the paper money version. Great sandbox for learning and practicing. It is not a guarantee of future success out there in the real world. Make sure that you are aware of some of those changes between paper money and live money as you move your practice from paper to live. Now, also, we're going to use a lot of technical analysis here this morning. You know, Brent and I both teach different technical analysis-based webcasts, as does Cameron May. But there's a lot of different ways to look at the market. Technical analysis is only one of them. Fundamental analysis, probability analysis, all included in the mix. They are all theoretical, none are guarantees. Schwab doesn't recommend the use of technical analysis or any one specific method of analysis as a sole means of investment research. Past performance, no guarantee of future results. And a couple of other things that we want to pay attention to as we go through this discussion. If we talk about putting trades on or we talk about stop orders, remember that stop orders do not guarantee the execution price, just the activation price. And so we're going to run into this discussion this morning. We're going to take a look at what's going on with the market indices. And Brent, as we mentioned, there's something somewhat important to the market going on today around the noon Mountain time frame that we might want to talk a little bit about that maybe people are waiting for. But there's also some individual names that are moving. Yes.
Yeah, it's Fed day, everybody, and there may not be a whole lot of suspense about action taken today by the Fed, but there'll certainly be a lot of interest and a lot of ears hanging on to every word that Mr. Powell says. 2 o'clock Eastern time, you'll probably get a rate announcement. Now that rate announcement may be there's no rate change, perhaps. We'll take a look at that later. But then a half hour later, we got a presser with Jerome Powell.
And I think you're right. I mean, I think the foregone conclusion, Brent, is that rates are going to stay the same, but that the discussion and the conversation and the specific language that Chairman Powell may use is going to get parsed and dissected for any indication of what might be coming. And I'll tell you what, I mean, given what the market has been doing recently, there are a lot of kind of tacit calls for this what's oftentimes referred to as a Fed put, right? The idea that the Fed backstops the market through interest rate moves.
Yep.
And that kind of allows for that downside movement to be buffered by potential upside gain if rates do change. And so there may be some investors and market participants that are looking for that idea coming out of the language of the Fed. But Brent, let's look specifically. I wanted to look at the futures markets first.
Sure.
And then we'll look at the indexes. So I've got my futures grid. By the way, I teach the futures webcast on Tuesday mornings. We talk a lot about futures content and futures discussion and futures strategies, but we're using the futures markets here as a means to define what's going on in that particular market, not looking at this from the perspective of being a tradable instrument. So the first we're going to look at here is the /ES, which is the S&P 500 E-mini futures, and kind of as a precursor potentially to what might happen in the cash market index. And early this morning, starting to see a little bit of a push to the upside, but a big reversal, Brent, in RSI or momentum in this index, at least in the last couple of days. We saw kind of that big reversal off of potentially a support level, and now the RSI ticking a little bit higher here. Yes.
Yeah, I mean, that shows how far the market had gone down. When you get that RSI down in the 20s, that more than anything, that just means the market has moved down very quickly a long ways, and that's exactly what happened. So then come Friday, we had a bounce, and of course, what in everybody's mind is this the low? And of course, the answer is we don't know whether it's the low. But what you like to see is a strong rejection of that low, which we kind of initially did. Yesterday, admittedly, was kind of a dud there, though, Ben. So I'll be curious to see how we follow up today. What you don't want to see is assuming you're a bull. What you don't want to see is a new lower low. We don't want to see those lows that we hit a few days ago breached there. That would be a big technical signal down, a big bearish technical signal down here. Even if we kind of can maintain our place for just a little bit, that's better than if we're breaking down. Now, today, as we mentioned, we have that Fed meeting later. It's possible, Ben. Do you think maybe we have kind of a lighter session until 2 o'clock Eastern time?
I would argue that that's probably pretty much a foregone conclusion. Not that it's a guarantee by any means. I mean, other news drives the market, but given the fact that that's kind of what, even though everybody has kind of a baseline assumption of what the Fed is going to do, which is leave rates unchanged. There is still that uncertainty in the mix, and Carol brings out the fact that uncertainty is probably going to be part of the conversation and the discussion, and the market. While there's the old pundit, the old chestnut that the market hates uncertainty. I mean, I think perhaps maybe the way to look at it is the market hates more a rapid increase in uncertainty. So if the Fed chair were to start using uncertainty in his language, that speaks to, maybe an increase in kind of overall market uncertainty. But at the same time, Brent, I think you pointed out a good thing, a good idea here, and that is the fact that in this downward trend, we never really had a new kind of higher high relative to this short to intermediate term trend. Now we have a new short-term high. And if we make a new low below this low where I've kind of circled that becomes a new lower high, lower low, and that now leads into the perspective of a downtrend, right? So even though we have this correction, that corrective move from a technical analysis perspective, technically we didn't really have a new higher high to compare it to. Now we do, and now we could see that change in the trend. The other thing is you're starting to see the 50-period simple moving average compressing down on the 200-period moving average. And for a lot of long-term traders, there's a couple of different signals going on here. There's a couple of different mixed signals going on here. For longer-term traders, this flip below and then back above the RSI level could be a buy signal.
Yep.
But for a lot of other long-term traders, a move of the 50 from above to below the 200, if we get to that point, could also be a technical toggle point. In fact, it's generally referred to as a death cross. The problem is that death cross oftentimes lags behind what the market is doing, right?
Yeah, no doubt. Yeah, so there's some traders, I mean, different traders put more or less importance on that RSI. And as you mentioned, the signal isn't, sometimes when the RSI gets below that 30 level, people call it oversold. So the immediate assumption is, oversold, that means it's time to buy. That's not how most technical traders approach that RSI.
Right.
What they will do is they'll wait, as you mentioned, for it to cross back above, out of that oversold area as a potential signal. But even at that, there may be more of a holistic picture that we're looking at in terms of, well, yeah, I mean, we've been in a downtrend. One higher high probably isn't enough to consider that a broken, a new trend up or anything like that. We have a 200-day moving average, which is potentially acting as support resistance here. And so maybe just a little bit of unclarity in the market.
Yeah.
And you mentioned something else there, Ben, and that is the market, obviously the market doesn't like uncertainty. But there's there's a lot of uncertainty in the market right now. But what we don't want is new uncertainty, I guess, in a sense.
Right.
And you can see this reflected in the VIX, in that, yeah, we still have a lot of uncertainty in the VIX, in the implied volatilities here reflected.
Right.
But notice the market hasn't recovered that much, but look how much the VIX is down from its peak. It was up near 30 a week or so ago,
right,
and now we're down to 21 and change right now. And it's not like the market, I mean, we had a couple pretty good days in the market, but the uncertainty hasn't been resolved in the market very much. And yet the VIX has dropped, I don't know what percentage that works out to be exactly, but the VIX has dropped substantially. And it's, we've kind of had, it's been kind of a dearth of good news, I would say, right now in the market, to be honest.
And I think you bring up a good point here, Brent. I mean, you take a look and see where that VIX had moved to. And it wasn't a unique kind of discrete spike in the VIX. It was this grind higher in the VIX. And again, as the market was moving lower, the VIX was moving higher. It wasn't spiking. So that represented kind of an overall perspective in terms of volatility that was different from a unique news event. And, I've talked about this in a couple of the different webcasts that I've taught, is the fact that, we're seeing this bleeding off, and high VIX typically begets low VIX, right? Because we see this being a mean reverting instrument. And when we get a big spike in the volatility, it bleeds off very quickly because institutional investors don't keep those hedges on for a long period of time against an event that's already happened. But when you have kind of this tone change and uncertainty and trend, you tend to see the VIX move higher over a longer period of time.
Yes.
Then it takes a little bit longer to bleed that off. But I think one thing to think about, and I'm going to just shift to this next comparison, and that is the SPX. That's our purple line versus the VIX. And I think this really illustrates that. We didn't see that much of a move to the upside, but we saw a pretty big pullback in the VIX. And that correlation now moving from almost that perfect 1 to -1 inverse correlation is moving back to kind of uncorrelated at this particular point. That correlation is moving back to kind of that zero line, which would suggest that the VIX is kind of doing its own thing, regardless of what the SPX is doing. And I think that suggests the fact that, as volatility bleeds off a little bit, there's a little bit more two-sided potential trading. It wasn't just all hedging in this particular
Yeah.
case. So, and that's kind of an interesting perspective here, and maybe that also speaks though too, Brent, to the idea that maybe the VIX stays a little bit higher for a little bit longer period of time instead of retreating back down into this 13 range, that it stays maybe up in this 16 to 18 handle where it was kind of at the top of that range before, right?
Yeah, it wouldn't surprise me at all because there still is, it's not a one kind of event that gets resolved type thing, which would be characteristic of a VIX that spikes and then just reverts down to the mid to low teens.
Yeah.
In this case, there's ongoing concerns about, well, a lot of things. I don't know where to start, but possible, we'll just say generally economic softening,
Sure.
which is a challenge. Maybe a weaker labor market, which is a challenge, and those kind of things together, in the light of maybe not, still questionable inflation data. Well, maybe I'd say, put all that together, you still have a lot of unease in the market. So yeah, I think it's probably unlikely to see the VIX down below 15.
Yeah, exactly. Now, one thing, so Zinc 560 asks a phenomenal question here, and I did not plant him there to ask this question, but it might as well have, because he asks about the volatility of VIX, and I just happen to have a chart of the volatility of VIX versus the VIX. This is VVIX, which is the symbol for VIX volatility plotted across the VIX, and the premise is volatility has been more volatile. The VIX has been more volatile in recent months. The VVIX has been running well above the VIX, but now we're in a position, as this has bled off a little bit, where volatility of the VIX has dropped. What this simply says in terms of investors and institutional traders, Brent, is that volatility is relative to where it is, volatility is relatively cheap. And that may spark longer, slower hedging efforts than simply buy it at whatever cost it might be, right? Buy those VIX put options to hedge at whatever the cost is, simply because there's a discrete event and we need to protect against that fear. So volatility of the VIX is a little bit lower at the moment, and so you can see that comparison. So that symbol is just VVIX. VVIX is the symbol used to plot the volatility of the VIX. So great question, Zinc. Brent, there are a couple of other things going on here. I just kind of want to run through the rundown here. I wanted to take a look. Let me bring up my single grid, which is kind of my sandbox to play in here. While we're right here on crude oil, that's part of the discussion. And we can see that crude oil kind of retreating from this little bit of an uptrend line, kind of staying right down around this 66 to 68 range, kind of in that area. So not seeing a lot of an expansion in terms of energy costs and crude oil prices. But the other thing I wanted to look at here, Brent, really quickly was /10Y, which is interest rate, the 10-year yields. Whoops, /10Y. There we go. And there's our interest rate. So still kind of building this right-hand shoulder of potentially kind of a head and shoulders, big kind of head and shoulders reversal. We're not there yet. It's not down on that neckline around that 4.12 mark. It's still kind of sitting right under this 4.35 right-hand shoulder of this perspective. And, interest rates up a little bit today. That's going to play into things like small caps, maybe seeing a little bit of a neutral day. They tend to be interest rate sensitive, but that's kind of where interest rates sit. And then, Brent, the other thing I wanted to look at really quickly, I know we always kind of take a look around the globe at what's going on in other markets and other central banks, since it's a Fed day. And the Bank of Japan left their rates unchanged at 0.5%. So that's being reflected, I think, a little bit in the yen futures here. again, remember, we're not looking at this from a tradable perspective. We're just simply looking at this as a reaction to the Bank of Japan leaving their rates alone, and it's kind of bleeding down below that diagonal uptrend line. But you can see the tone change since the kind of the beginning of the year, as the Bank of Japan was starting to tighten a little bit.
Yeah.
And we saw that move to the upside in the currency.
Right? Yeah. So the yen strengthening, the dollar, on the other hand, is kind of going the opposite direction for the most part. We've seen a lot of weakening there in that. So, we have had a little pullback. I would say right now, looking at that yen chart, it's not necessarily breaking the trend that it had up, but we'll have to see. This is kind of a key point where we're going. Whether you're looking at yen futures or whatever stock you're looking at, when we consider trend, when you start breaking below and establishing new lows, lower lows, and lower highs, that's when we're going to kind of say, well, that trend is really breaking here. Right now, it looks kind of like a bull flag pattern, I guess I would say, on the yen futures.
For sure. Yeah, absolutely. And as a matter of fact, we talked a little bit about this yesterday morning in the futures webcast. So let's do this, Brent. I know that, before we get too far afield here, let's take a look at kind of the expectations. Since it is Fed Day, I'm going to pop over here really quickly to the CME FedWatch tool. Now, a couple of things I want to point out. Number one, this is a third-party tool. It is provided by CME, the Chicago Mercantile Exchange. So its opinions and its discussions and creations and everything else are its own. They're not influenced by or reflective of Charles Schwab. So this tool simply takes that expectation, and there are a lot of different ways to calculate this, but this is based off of Fed funds futures markets. And if the current target rate is 4.25 to 4.5, this is giving us the expectation. So the expectation is about a 1% possibility of a quarter point cut and about a 99% probability of leaving those rates alone. And again, these expressions, now this isn't a guarantee by any means, but backwards looking, this tends to be pretty reflective of what happens. Oftentimes, the CME FedWatch tool is not terribly wrong unless there is a big surprise, right?
Well, yeah, especially as we're this close to the meeting. As we go out further, and we'll do this in a minute, as you go out further in the year and we're going, well, it looks like there's going to be a couple rate cuts this year. We can kind of extrapolate that.
Let's look out to the 7 May, and I think that's a good point. You see that percentage changes, 83 on the leave it alone side and about 16% on the cut at a quarter point side. We'll go out to the June meeting again, which is be the next one from there, 83 and 16. Kind of say, oh, there it goes. It changed. It just was lagging a little bit. So now this is an interesting one because now we're looking at a little bit of a possibility of a half a point cut bleeding into the mix here. And we go out, let's say we go out to the September one, which is oftentimes, because this comes on the heels of the Fed's meeting in Jackson Hole, their policy meeting, which is oftentimes an important meeting. We go out there and it's kind of that distribution curve across the board here. This would be leaving it alone, the 12% probability of leaving it alone, 36% probability of a quarter point cut, 36% probability of a half a point cut, and a 13% possibility of a 3/4 point cut, and even bleeding in a little bit of a possibility of a full point cut. And that's, again, you see that kind of uncertainty expanding across these perspectives, right?
Yeah, and as much as I'd like to see like interest rates go down a little bit, that would probably be a pretty bad sign if we have that much cutting there in terms of the interest rate bin, because that would indicate the Fed is probably trying to stimulate the economy at that point. But I guess the point is, this is, sometimes you hear from the Fed or Chairman Powell, we're data dependent. Well, this what the future holds is going to be dependent on the data at the time. So right now, it can say this can vastly change between now and here. This is September we're looking at here on this.
Right.
Whereas it's like a weather forecast. The closer you are to the time, the more accurate that forecast is going to be.
Well, if we look at the comparison, if we go to the comparison tool, we can see what's been going on over the course of the last month, last week, and last day. And there hasn't been a lot of variation in this current forecast. But we go out to the next meeting with this compare tool on, and you can see that there's a little bit of a dispersion in terms of the expectations, right? So as things change, this is a great way to kind of see the fabric and texture, if you will, of how those rate cut expectations change or rate hike expectations change based on what's going on in the market. As the market moves, you can kind of see, and not just the market, but also economic conditions and things like that. So playing into this mix as well. So this can be a helpful tool. By the way, I mean, again, this is a third-party tool, but if you want to learn a little bit more about, how the Fed influences markets, you can come back up here to our Trader Talks webcast channel, and you can type in Fed, and you can see a bunch of stuff. I talked a little bit about it. I know Brent's talked about it. Our good friend Kevin Horner talks about it on a regular basis. There's Brent right there. There's Cameron May talking about the Fed move, and so a bunch of stuff talking about those ideas and how the market moves in relationship to the Federal Reserve decision. So let's pop back over here, Brent, because I think it's probably a good opportunity for us to talk a little bit about some of the individual names that are out there and are moving here this morning. Really quickly, before we get into some individual names, let's pop back over here to our index curve and just kind of see where things are settling as we start. We're into kind of the first 30 minutes of the morning here, and kind of that early morning volatility settling out as the round robin goes around and things start to trade. The SPX up here a little bit, about 0.63 on the day so far. The NASDAQ up 0.72 on the day. And the Russell 2000, as we kind of suspected, kind of sitting here at a more sedate, up 0.43. But all kind of giving us the same perspective, the just differing variations of that. Yeah. And notice that today brings us right to that cusp, if you will, of the very ominous sounding death cross on the Russell 2000. Dun, dun, dun.
That Russell has struggled. Russell, for those who aren't aware, are small caps. Yeah. So tend to be a little bit more, if fears of recession or economic slowdown, kind of come to fruition, then the small caps tend to be hit a little harder than large caps there.
For sure. So let's pop back over here to our single grid, Brent, and let's take a look at some of those individual names. I know a couple of people have mentioned what's been going on with Apple. I talked a little bit about it yesterday morning on Market Movers or Morning Movers on the Schwab Network, which is brought to us by our media affiliate, Charles Schwab Media Productions, and talking a little bit about Apple. And we see that Apple kind of coming up off of that little bit of a bounce and a bit of a breakout today. Brent?
That's a nice, strong move today on that. We do have a pretty substantial resistance overhanging, perhaps, but that's that's what you want to see. And Apple is one of those Mag 7 stocks, and it's they have all kind of, I don't know, laid an egg this year. To be honest, they have all struggled of late, and Apple, maybe this is this is helping. This is a big company. I can't keep track of which is the largest in the world anymore, Ben, but because it keeps switching. But this clearly has a huge impact on the NASDAQ and the S&P 500, to name a couple.
So another that is seeing a move here this morning is another Mag 7 stock, sometimes referred to now as the Mag 6, right?
Yeah.
Because sometimes Tesla, which we'll look at here in a moment, gets kind of stripped out of that. But NVIDIA, we saw a speech by their chairman last night as their developer conference kicks off. And we saw an early move and a little bit of a sell-off here. And it's kind of settling back into kind of a not necessarily a bearish harami, but an inside day maybe where we get this candle kind of coming inside the range of the previous day, a little bit of volatility going on with that candle. So we could see this move up or down from here, potentially a little bit of sideways movement in the short term here on NVIDIA. We might as well, Brent, continue this discussion of individual names by looking throughout, maybe around the rest of the Mag 7. Let's take a look at Meta. And
I see it.
Meta,
You see a theme here
yeah,
on this. Although this is even less of a bounce. This is kind of right near yesterday's low almost,
yeah.
yesterday. So we're not. So if the others were a little iffy, but this one's really not showing any bullishness at all here.
And there's an earnings announcement still over the horizon, just a little ways on this particular stock. But at the same time, this has given us a little bit of a hammer here for those looking for perhaps that kind of bounce possibility. I know this is something you talk about. We talk about fairly regularly. We do it in the workshops as well. We talk about that close above the high of the low day perspective. And that would be a move from where it is at about 585 up to above this 600 level. At that point, let's take a look at MSFT, Microsoft, also in this space, kind of continuing this downward wedge, if you will. But oftentimes in an uptrend, a falling wedge like this can be a bullish indication, but in a sideways trend, it seems to be kind of coalescing down around this support level here at about that 383 mark, doesn't it, Brent?
Yeah, we'll have to see if that holds there. But so all these stocks that we've been looking at, that they are kind of leading. They've been leading the market down.
Yep.
Question is going to be, can they lead the market up? Well, we got to see some meaningful reversal, and right now we have not seen it on. I don't really see much on any of these in terms of showing a lot of strength here.
Let's take a look at Google here. And again, same kind of thing, right? Back down on or very near, if we were to extend that out to the right, this support about the 161 mark. So not a lot of strength there. So not a lot of strength coming back in the Google space. And then the other one that is in this mix, AMZN, Amazon in the Mag 7. This is maybe the brighter spot, at least at the moment. A couple of days of up candle up off of this support level, but still, Brent, a long ways to go, it would seem, doesn't it?
Long ways to go. We've had a lot of trading kind of in the area where it's going. I mean, if you were to, you don't need to do this, but if we were to do like a volume profile, we'd probably see a whole bunch there between the 180, 190 level. Could settle in that area. Hopefully we get a bounce on this and as well as the others here. But again, nothing. I mean, up 0.5% today. But what we said earlier, Ben, is
right.
Whatever we do in the morning is likely to change after around 2:00
Sure.
Eastern time. I don't know whether that's going to be to the good side or the bad side, so to speak. But we're likely to see more volatility in the afternoon because of that Fed meeting.
For sure. And then the last one that we'll look at here is part of the Mag 7, not part of the Mag 6, and that is TSLA, Tesla. And initially a little bit of a gap up here. If we zoom back in, a little bit of a gap up and a bit of a sell-off, Brent, here this morning, but down near, I'll tell you what, down near a pretty solid, or what has been a level of support, not necessarily solid, but down around that 221 level. Support levels, resistance levels are never solid. They are not, brick walls on the chart, if you will, right?
Right. And, so this, of all of them, this has dropped 50%, over 50%, I guess,
Yeah.
From its high back in December. There was maybe a little, I guess maybe a Trump bump type help to this company, and initially after and latter part of last year. And then it's come down, and the question is, can it stem the tide? Obviously, there are concerns, whether you love Elon or you don't love Elon, it doesn't matter. That is certainly affecting the company, it appears, here. He was on the Hannity show yesterday trying to address some of the vandalism that's been occurring, I think. And I guess the broader question, though, is when you see these companies that have these huge sell-offs, at a certain point, they become cheap. I mean, I don't think anybody, not many people, were probably going to call Tesla cheap when it was up at $450.
Right.
But right now, you have to say, when does the valuation consideration kick in and change the narrative on a company like Tesla? Right now, it hasn't, it seems, but at some point you may expect that would probably happen.
Yeah, for sure. And from that perspective, I think you're absolutely right. I mean, I think this has been an area of a lot of focus, and it has been one that has had a lot of influences, both political and non-political, and it's going to be an interesting read, I think, perhaps on not only the EV space, but also kind of the political structure, if you will, of the markets for these Mag 7 stocks as well. Brent, as we're kind of coming down into the last segment of this, I think it's probably also a good idea to maybe talk about some of the other stocks that are in the mix here that are seeing some things that are maybe changing. I know we talked a little bit about the fact that the small cap stocks kind of staying neutral, at least at this point, with those interest rate changes, but also some changes coming as we get into kind of changing consumer sentiment and changing retail perspective. I wanted to take a look at a couple of stocks here that kind of define that landscape. And one of those is Walmart, and Walmart kind of coalescing. Walmart looks like those Mag 7 stocks, right? It was kind of giving us that vibe of the head and shoulders type of reversal pattern here. Now maybe starting to see a little bit of winding up into this. We might even call this a bit of a symmetrical triangle here as consumer sentiment changes and consumer buying and retail sales numbers change, coming in a little bit lighter. What do you think about something like this as far as that retail space?
Well, so Walmart was kind of a darling in the retail space until a month or so ago. They've done really well. And, one of the narratives about Walmart is even if their, sentiments change in terms of it, economic slowdown, Walmart is more, kind of staples oriented, and therefore maybe a little bit more immune to that, an economic slowdown. But they've clearly had a pullback. The tariff discussion may not be helping their cause here on this, but we'll see if this is a meaningful bounce here at this point. If we can get a break above that little wedge there, that would be a big thing for Walmart here on that from a technical standpoint, as maybe a first step in a trend reversal.
For sure, and a couple of people pointing out the fact that we've got some kind of manufactured or artificial deadlines as far as the tariff discussion is concerned. April 2nd being one of those as a potential deadline for delayed tariffs kicking in. And so, you can always put in a horizontal line here on your chart and, and call that, we can go to our time series, our timeline here, right there. And we can draw in, let's find our April 2nd and draw in that timeline. And not that necessarily that's going to have anything magical to do with this, but you could even label that and say, something like tariff deadline.
Yeah.
I got to spell that right. I always spell it with 2 R's and 1 F, and it's not. So there we go. We'll put in that tariff deadline, right? And put that kind of threshold on the chart. And again, not that that's anything magical, but that's kind of a line that some traders may want to use to pay attention to, right? So
yeah, and that could help with the uncertainty discussion too. Yep. We talked about the markets don't like uncertainty. Well, that's just one other little bit of uncertainty that is overhanging the market. And I mean, sometimes whether the numbers, whether it's a earnings or whatever news is, whether it's good news or bad news, at least once the news comes out, that uncertainty is here. Certainly not all uncertainty is going to go away come April 2nd, but it may help to a little certain extent at that point.
For sure. Now, to be fair, Brent, we're coming down towards the end of March. I mean, it's crazy, right? That this month has gone so quickly. But we're still in earnings season, even though we've got some late tail earnings announcements that are coming out, and then we're just prepped ready for the next earnings season to rotate into place right after that. But we still have today coming out. We have FedEx with earnings. Yeah. And this is generally considered to be kind of a read on business activity, if you will, and been making that move to the downside here, and potential for a pop to the upside here on FedEx. The other area, Lennar in the home builder space, has an earnings announcement coming later this afternoon. Home builders have been pushed to the downside to a certain degree. And then the other in the chip space, and kind of rotating back, not a Mag 6 or Mag 7 stock, but one that definitely defines or helps to define the chip space as well, that has seen a little bit of a bounce here, is Micron Technology. Brent, what do you think here?
Well, I think we have a nice sideways channel, and in a way it makes it a little easier because we have a kind of a clear support level. When Micron's getting closer to that 85 level, it's, investors seem to be saying, hey, this seems like a deal. It seems inexpensive. And at least over the last 6 months or so, when it gets up closer to that 115 level, investors say, well, it's getting a little pricey. Maybe I'll do some profit taking here. And so we're in this channel, unlike a lot of these other stocks where they've been in a downtrend. I mean, look at this over the past couple of weeks as compared to the rest of the market. The rest of the market, well, that's a generalization, but the major market indices, most of the big movers in the market have just been in a tailspin of late. Well, not so much for Micron here.
Yeah, exactly. And so, I mean, and then the last one that I wanted to look at here really quickly is, again, in the retail space, perhaps becoming a little bit less influential, unless you're a sneakerhead, but that is NKE, Nike. And Nike, this is interesting because I was watching this the other day, maybe starting to build this little bit of a higher low here on this pullback and a bounce, and maybe now starting to squeeze. Whoops, I've got my labels on there still, but starting to squeeze into kind of this longer term, pretty acute symmetrical triangle here, right? So seeing that potential for breakout on that earnings announcement, Brent.
I know that would be very good news for Nike. I mean, even on this chart, you can see if you were to connect the highs of the whole chart, we kind of have this long-term descending triangle, if you will, on this. And we're not even near the upper side of that. If we could break, hopefully for Nike proponents, that it would break above there. But first things first, we got to break that small little wedge area out there on that.
For sure. So I'll tell you what, Brent, since we've got now about 45 minutes, almost 45 minutes into the market here so far, let's just kind of wrap this up with a real quick review of what's going on with those indices as things are starting to settle out a little bit. We've got a couple of minutes to go here in our discussion, but the SPX still kind of sitting at that, maybe a little bit of an advanced block, not a lot of movement to the upside. RSI maybe advancing just a little bit because it's up on the top of that candle. Same thing with the NASDAQ, although this is maybe a little bit more sideways movement, and the Russell 2000 starting to gain a little bit of strength here relative to where it was earlier, starting to see it move outside the range of yesterday's trading in advance of the Fed announcement. And so, Brent, I tell you what, this is going to be an interesting perspective. I know later today, we've got, and I'm pretty sure it's Michael Fairborn. I'm going to pop back over to our calendar really quickly. We'll go to our live webcast of Virtual Workshops calendar, and we're going to come down here and take a look at today's events. We've got Michael Fairborn talking about market and sector analysis. That's going to be after the Fed meeting. That's going to be a great read on what's been going on and what's happened throughout the day, specifically relative to the Fed. I think he's going to have a good opportunity to kind of digest that a little bit and how the market is initially moving. I'm going to be talking about index options coming up here in just a little while.
Yep.
And then, Brent, I wanted to point out the fact that you're going to be covering, even though the picture hasn't changed here, that is not Brent Morse. Brent Morse is a lot better looking than I am. Brent Morse is going to be covering market movers on Friday afternoon, since I'll be in Chicago, kind of wrapping up the week. So, Brent, I'll turn that to your charge on Friday, give you the opportunity to kind of wrap up this week. What do you say?
Well, I'm looking forward to that. And, I would just suggest everybody each week, not just because I'm on it this week, but
Yep.
If you want to wrap up your week with good market knowledge going into the weekend, check out that Market Mover session each week, 4 o'clock Eastern time.
And remember to give us a follow over on X at Ben Watson CS, at Brent Morse CS, and click on that subscribe button down here at the bottom of the page as well. Thanks again, everybody. We will see you again very soon. I'm going to be up next at the top of the hour with trading index options. So we'll see you then. Thanks, Brent. Thanks, Cameron May. And thanks to our production staff. And thanks to all of you. We'll see you again very soon. Take care, everybody. Bye-bye.